Meanwhile, the electronic currency Bitcoin is having its biggest year since its launch nearly 11 years ago. It's more than doubled in price through this year. In November alone, it added more than 50% in value. Blockchain investments, though, come with high volatility, often making inexperienced investors more wary. Well, joining us now from Switzerland is Yves Bennaïm, chairman of 2B4CH, a non-profit think tank all about cryptocurrencies. Let's speak to him now. Thank you very much for talking to us. Just tell us what's happened to the currency, particularly to Bitcoin, over the last 12 months.
It's very easy to understand. There is a limited supply and there is more demand. Because there is no central authority to create more Bitcoin, the price goes up.
So why? Why has that happened?
I was looking at the news that you were broadcasting up until me two seconds ago, and it's very easy to understand that a lot of people are not completely optimistic about their government or the future or the situation where they live. So the Bitcoin is kind of an edge to the insecurity of money because there is no inflation possible. Because it's been dubbed digital gold. It's a way for people to put money aside in a way that it does not participate. It's completely uncorrelated to the stock market or national currencies or public policies, for example.
What's the risk factor associated with it?
So because it's software, there is always a risk with software. Everything can crash or have a bug, but it's been 11 years now, so I think it's fairly solid, and the people working on it have been cleaning up the code and improving it over the years. The risk, of course, is people trying to manipulate it. Or what is called FOMO, the fear of missing out, people who don't understand and are rushing to buy something only to reach the peak and buy a very expensive something that will correct itself eventually a little bit. It's been going up steadily since its creation 11 years ago. But of course, it goes a little bit up, a little bit down, a little bit up, a little bit down. Mm-hmm. And I think the important thing to remember, and of course, it's not financial advice or investment advice, but is to understand that you have to zoom out. You have to think long term with Bitcoin, just like you would with gold.
You said there's often some misunderstandings. You said that can take place in this market. What are the misconceptions we have over Bitcoin?
So one misconception is that it is the first version and that new versions are coming and they're much better.
No comment from England.
Sorry?
Sorry, carry on.
Okay, so a lot of charlatans will come and try to peddle their own version of Bitcoin. Either it's a copy or it's a new software, and every time they will try to say it's like Bitcoin but better. So this is something that is very dangerous at the moment because Bitcoin is quite expensive, and a lot of people will try to buy something that is cheaper. The second thing is people think that Bitcoin is like a stock, so you have to buy one, but you're not buying one. You're buying a fraction of Bitcoin. You can buy, let's say, $10 worth of Bitcoin or $100 worth of Bitcoin. Just like gold, you don't have to buy, like a gold bar. You can buy 5 grams, 10 grams, or a gold necklace, for example. And the big misconception with Bitcoin is that because it's presented with a market cap, it looks like it's a stock, and therefore people think it's too expensive.
Really fascinating to talk to you. Thank you very much, Yves Bennaïm, chairman of 2B4CH, a non-profit talking about cryptocurrencies.
Thank you.
Still to come.